Hello friends and followers. I would like to show you how the skyscraper strategy works, and the best way to explain it is with an example from the chart. This is the euro dollar on a 1-hour time frame. After a couple of days in the downtrend, the longest positive bar currently appears here. During the downtrend, the market stopped rotating for 2 days before continuing lower. The rotation started with this bar and ended with this red candle. I'm going to apply the volume profile between the two candles and see where the low volume area is. If the price starts to rise again, it could reach this level, and that will be my expected profit target. I am looking at the chart. I see a lot of buying activity and I want to go long. I want to risk $600 on the whole trade. So, what other traders would probably do now? They would go long by placing a buy market order. They would open a one-lot position, and I think they would place a stop loss somewhere below this low at 60 pips. The profit target is the value area low of the volume profile from the previous rotation. If the price goes down and hits the stop loss, they have a losing trade minus $600. If it goes a little higher, they will probably tighten the stop loss to break even soon. If the price then comes back to their entry point, they will end up at zero profit. But we will trade the same opportunity using the skyscraper strategy. We'll also risk a total of $600, but we'll spread it over several smaller positions. I'll show you exactly how it would work in this case. First, I'm going to measure this long activity from the lowest turning point after the close of the last positive candle. This is where we're going to build our skyscraper. The activation price is the reception on the ground floor. The upper floors are flats where people live. And below the reception area on each floor, moles live underground. Now we need to figure out how large a floor will be. Since we want mole 2 on the second underground floor to be exactly at the turning point, mole 1 will be 50% of the distance between the close positive candle and the turning point. All floors in the skyscraper are the same size. I will now take this skyscraper on a clean white screen and explain how it works inside. Imagine a skyscraper where there is a reception on the ground floor, and above it are the people living in their flats. Below the reception, there are moles living underground. Each skyscraper has only one reception at the entry activation price. There can be an unlimited number of flats above the reception. Here I draw 4 flats. In the underground, there can be an unlimited number of moles below the reception. Here I'm drawing 2 because I can't fit any more. In the platform, it will look like this on the chart. On the left side of the screen are the setup parameters for a new skyscraper. This is the size of the floor and is entered in ticks. For this euro-dollar instrument, 220 ticks is equal to 22 pips. All floors in the skyscraper are the same size. As I mentioned in the previous analysis, we do not want to risk more than $600 on the entire strategy. I will divide the total amount risked into 6 positions. Let's imagine we have a basket with 6 balls in it. Each ball represents one position, and is therefore worth $100. So we will have 6 separate positions, each risking $100. I'll put them back in the basket now. Here we set the trade direction to long. Of course, the skyscraper strategy can also be traded short. The logic is the same, just in reverse. This is where the activation price is entered. By pressing the M button, the reception can be activated immediately at the current market price. Or the button with small arrows can be used to interactively point directly to the desired price in the chart. This is where you set the price at which the mole 2 will be placed. In the settings I can choose which mole in the ground should be used to calculate the correct floor size. The default setting is to calculate according to mole 2. Here we enter the target price at which we want to set the profit target for all positions. Again, we can use the arrow button to enter the price directly by clicking on the chart. I will explain the other settings later. Now the price has moved to the activation level and the strategy is triggered. When the strategy is triggered, 5 individual positions are taken from the basket and placed in the skyscraper. The first position to be filled immediately is the position at the reception. According to the actual filled price, 2 positions are placed on flat 1 and flat 2 with a pending by stop order. Below the reception, 2 positions are placed on mole 1 and mole 2 with a pending by limit order. At the beginning we always want to fill 3 positions and return the remaining 2 positions in the basket for later use. So it can happen that after starting the strategy we hit the direction immediately and the flat 1, and then flat 2 positions are filled. Once flat 1 is filled, the pending mole 2 position will automatically go back into the basket as we only want to have 3 positions. And when flat 2 is filled, mole 1 goes back to the basket. Or it may be that the flat 1 position fills first and then the market moves to the mole 1 position. In this case, the mole 2 position will be returned and later the flat 2 position will also be returned to the basket. If the market moves in the opposite direction after the activation, mole 1 will be the first to fill the pending position. Once filled, the flat 2 position will return to the basket. If the market then goes up and fills the flat 1 position, the mole 2 position will be returned to the basket as well. Finally, the last possible combination to pick up 3 positions is if the market moves in the opposite direction, picking up mole 1 and then mole 2. In this case, the flat 2 and flat 1 positions will be returned to the basket. Each position is managed separately, and independently of other positions. Depending on the settings, each position will have its stop loss set 3 floors down. The actual filled price and the specified size of one floor is used for the calculation. In addition, the final stop loss placement can still be adjusted by the offset according to the settings below. In this case the stop loss will be placed 3 floors down plus 1 pip. When the price moves 3 floors higher than the entry price of any position, the stop loss will automatically move to the break-even level plus the value of the offset setting. If the price returns to the adjusted stop loss on break-even, the position is closed without loss and returned to the basket to be used again if necessary. If there is a mole 1 and the price moves 3 floors higher, a new limit order will appear at the reception. From the reception upwards, a new limit buy order will always appear for each flat if there is already an open position 1 floor below. For a buy order to appear for the reception, there must be a mole 1 and the price must move 2 floors up from the reception. This means that mole 1 will already be secured by its stop loss. This is how the strategy adds new positions to the trade direction if it still has some available positions in the basket. This system of adding new positions is repeated as long as there are available positions in the basket. The strategy adds new positions in the direction of the trade in this way, but only one at a time. If there is no position 1 floor below, a new limit buy order won't appear. Things work differently below the reception desk in mole land. As the price falls, new pending by limit orders will gradually appear for the moles on the lower floors. This happens as long as there are available positions in the basket. Once the basket is empty, no more positions will appear. Each position has its own stop loss according to the settings. If a mole reaches its stop loss or closes at break-even, the position will disappear. However, a new pending buy order will appear in its place if the price moves up or down 1 floor. If the price moves up 1 floor, a buy limit order will appear. And if the price moves down 1 floor, a buy stop order will appear. Only one of these two buy orders will appear, whichever comes first. Let's take a look at the cTrader platform to see how the trade would have turned out. The positive candle that was shown during the analysis is currently being completed. I'll click on the new button and fill in the setup parameters. We want a total risk of no more than $600 and a total of 6 positions. The trade direction is long. We want an activation price of 1.0540. Look, if I click on the arrow button I can click directly into the chart and select a price. I can't quite get it right, so I'll write it out manually. Mole 2 will be at the turning point where the buying activity started at 1.0496. We'll set 1.0630 as the total profit target according to the analysis. We set the floor size to 22 pips. I need to fill 220 ticks here. I set both offsets to 1 pip. I will allow the strategy to place a buy position at the maximum of the fourth mole in the underground. I don't want to trade lower. The strategy has been entered and the activation price is waiting to be filled. Once filled, notice how 2 pending buy orders for flat 1 and flat 2 appear above the reception. And at the same time, 2 pending limit buy orders for mole 1 and mole 2 also appear. So let's see which 3 positions will be filled. I'm going to speed things up a bit. As the second position picked up mole 1 and the price then went up to pick up flat 1. As the price climbed 3 floors above mole 1, the stop loss automatically moved to the break-even point. And as the price has also climbed more than 3 floors above the reception, we have already secured the reception at the break-even point. The flat 1 position remains without a shifted stop loss for now, as the price has not yet risen more than 3 floors above its entry price. The market reverses just before the profit target and returns to the reception. The reception closes at the break-even point and the mole 1 also closes at the break-even point. And because it hasn't managed to secure the flat 1 position, it unfortunately ends up on the stop loss. As the price falls, new buy orders appear in the underground for moles 2, 3 and 4. When the market rises again, a new pending buy stop order should appear on the mole 1 position because mole 1 has closed at a shifted break-even. If the price is more than 2 floors away from the pending order, it will cancel it. And when it is within 2 floors again, it will enter it again. In this way, the strategy returns the free positions to the basket so that it can use them in more appropriate places. The strategy just managed to survive the highly volatile non-farm employment change and unemployment rate news reports. The mole 2 was closed at the break-even point, but as the price soon moved up a full 1 floor, a new pending limit order was placed on the position with a new mole 2. This was also filled very quickly. After the news, the price went up and notice that we did not have a reception because it was previously closed at the break-even. As there is a mole 1 position and the price has gone up 3 floors, there is a new pending buy limit order for the reception position. A buy limit order for the reception was filled and, with a large dose of luck, turned just above the break-even stop loss of mole 1. The trade eventually reached the profit target and made a profit of $662. During the trade, 3 positions closed at their break-even point and returned to the basket to be used again as part of the strategy. We had a stop loss, and as you can see, the loss is actually around $100. A total of $600 was risked. There were 6 positions, so it's really $100 per position. I will now go through the list of trades executed within the strategy so that you can see the individual trades. I hope this video has given you an understanding of how the Skyscraper strategy works. If you enjoyed this video, please give it a like. I wish you good luck and many successful trades with this strategy.